Hello, Trade Pros. It's Victoria from Trade Pro Academy, and as you can see, we do have some exciting news in terms of cryptocurrency. Today, we're going to be talking about the CME's new release of Bitcoin options. So the Bitcoin market is getting yet another derivative. So the famed cryptocurrency that broke the 20,000 mark per Bitcoin last year is now associated with options contracts. So starting in January 13th, 2020, we will see Bitcoin options on their futures. In 2017, the CME announced that the Bitcoin futures contract came out and there would be some excitement around it, but as we could see, the volume was drastically low at the beginning at least. So crypto traders were reluctant a little to adopt that extremely high margin contract, and the liquidity was sparse. So there was about $25,000 of margin required for one Bitcoin futures contract. Now, the Bitcoin futures market has risen 92% year over year in terms of average volume, about 6,500 lots a day, which is equivalent to 32,500 Bitcoin on average, which is not that bad on a daily basis. Now, each Bitcoin future contract gives market participants access to 5 Bitcoin. Before we continue with this, if you guys haven't subscribed already, drop down below so you don't miss another video. We drop them every week and daily. Ring that little bell to notify you when we do go live, and let's continue with this Bitcoin options video. Now, the Bitcoin futures were listed on the CME, and the Bitcoin options are now going to be listed on the CME in January 2020. The contract unit is defined as a BRR, or Bitcoin reference rate, and it's calculated daily using trade flow from the major Bitcoin exchanges and platforms. So the price deviates slightly from that cash Bitcoin USD, but it is calculated in such a way that the futures and options reflect it, so there's no real discrepancies. Again, they are derivative markets. The BTC option market specs are 1 BTC future per options contract, so that gives you exposure to 5 Bitcoin, just like the futures contract. The contract is quoted in USD per BTC, and the regular tick is 5 index points, or $25 for premium greater than 25 index points. Now, what does that mean? We'll go over it in just a bit. What's interesting is the tick increment is dependent on the options cost. So if an option is greater than $25 per contract, then it's $5 a tick and 5 times the Bitcoin per contract, or $25 per contract. That's the tick movement. Or 25, if the contract is equal or less than $25, the cost is $1 per tick, or $5 per contract. Now, it's settled in actively traded Bitcoin futures. It's a European style option, so that means you can only exercise at the expiration date of the option. So sellers cannot be assigned before expiration. You can naturally trade out of the position before expiration if you don't want the risk of getting exercised. Now, what's interesting is the listing cycle. So the listing cycle for the options actually mirrors the futures listing cycle. So since the futures came out before that derivative contract, the options reflect that derivative contract. So the options expire on the same day as the futures equivalent. So for example, a December option is based on the December futures expiry. So every other month corresponds to that month. So January options expire when the January futures do, and so on and so on. Now let's look at an example here of what we mean and how this is really calculated. So if you have 7,900 call option on Bitcoin options with a December expiry, and on the date of the expiry, the BRR price is 8,215. This means that the call expires in the money. So that means you made money on this call. So how much money did you make? If the call was $200 in premium, the long call holder will automatically buy the December futures contract for $7,900 on the expiration. So that's how they get exercised. Right away on expiration, they get exercised automatically. And you guys may be worried about the risk of getting exercised from all this options education, but in the Bitcoin market, it's a little more simple. They're all cash settled based on the futures because the options are based on the futures. So it's just a string of derivatives. Now, what does that mean? So since the futures are cash settled and the futures and options contract expire on the same day, the long Bitcoin holder will get the profit of the position. How much is that profit? Let's take a look at it. So you take the difference between when it expires, the in the money price minus the actual call option strike. So each contract has 5 BTC in it, remember, as per the futures. So that would equate to a $1,575 gain. Now the net profit, you just take away the price of the call option, and there you go, $1,375. If you lose on a position into expiry, you will not be exercised since you are out of the money on the option. So the max loss is limited to the premium paid. That's the good thing about options. You don't necessarily have to get exercise unless you're on the short side of one of them, then you might be in some trouble. The risk is capped to the premium. Premium will probably not be too expensive on these Bitcoin options, and it gives you a lot of exposure. Now, why is the Bitcoin market important? Why is BTC on options important? Well, it offers BTC traders a potential to save on margins through margin offsets. Like I said, you can have limited risk based on the premium in the options, and you have a lot of exposure to actually the Bitcoin market. Remember, one contract equals one futures contract, which equals exposure to 5 Bitcoin. Now, it mitigates the risk of counterparty default through central clearing through the CME. Now, again, Bitcoin and cryptocurrency, they're kind of de-evolving in terms of the decentralization aspect because the CME is trying to centralize everything. But that is also a pretty big benefit in terms of potential default through these derivatives. It also gives traders more options, diversification, risk management, and building strategies. So you can build on strategies when you're trading the cash market or whatever it is, BTC, and you now have derivatives to build on that. These are just a few of the examples. And this is a new product that is set to launch in January 2020. So it's pretty exciting news as the Bitcoin futures market rises in average volume. I think there could be a decent amount of interest in this options market as well. So having said that, this is Victoria from TRADEPRO Academy. I hope everyone enjoyed this video on Bitcoin options, a newly released product in 2020. So get excited, guys. Ring that little bell to notify you when we do go live every single morning. And in the comment section, drop what you think of this. What do you think of cryptocurrency and this new derivative standpoint that Bitcoin will now be traded on? I hope you guys enjoyed this video and take care.